Mr. Hill, you're recognized for 5 minutes.
Thank you, Chairwoman, and appreciate your great leadership of this committee and picking this timely topic to talk about. I think this is the third time that we've addressed the stock buyback issue during this Congress. I've got some slides I wanted to run through quickly just to set the stage. This first one talks about growth investment because I've heard from my friends that people are not investing in their companies, that instead they're using that money imprudently to invest in stock buybacks. This is since 1990, and you can see in 2018 that we're at a really almost all-time high at 17% in the S&P 500. Let's go to the next slide. Stock buybacks, as was noted in everybody's opening testimony, did increase after tax reform. In my view, this is a positive thing. Buybacks are tied to the growth in profits in corporate America, so the more profitable companies are, the more they might consider a stock buyback. And certainly the 2017 impact of the tax report caused in the S&P 500 more cash to be reinvested in the United States. And in addition to investing in people and capital investment, they did invest in buying their stock back. So I view this as sort of a transitory period. And most of that money, I would say, when you look at it, came from just 20 stocks in the S&P 500, Madam Chair. And those 20 stocks had the most money trapped offshore. So that money came back into the United States, and they did participate in stock buybacks. So let's go to the next one. But the pace of investment, as I say, over the long haul is still in that range, investing in companies. You see the December 2017 tax enactment, but growth has only grown. This is growth in companies, in R&D, capital expenditures, and research. It's all been a positive story the last 30 years. Let's go one more. And then the S&P 500 cash return payout ratios, dividends net of buybacks, you can see that the return of cash historically is still in that historic range where it's been. And I just would argue whether it's paid back in stock buybacks or dividends, it's good for investors. And who does gain here are the investors in our pension plans and our 401k plans. This money doesn't go nowhere. It goes back out into our economy, as Mr. Coffey argued, and I read in your materials, you've got a great background in intrinsic investing. I wanted to read a quote from someone you admire that you put in your marketing materials, Warren Buffett. Warren Buffett, CEO at Berkshire Hathaway, says, stock buybacks are sensible for a company when its shares sell at a meaningful discount to conservatively calculated intrinsic value, which you have in your testimony. Indeed, disciplined repurchases are the surest way to use funds intelligently. It's hard to go wrong when you're buying dollar bills for 80 cents or less. Do you agree with that, Mr. Coffey?
Absolutely.
Good. And he says, don't forget, companies who do that inefficiently are what? Are they punished by the market if they overpay?
Absolutely.
Thank you, Mr. Coffey. Also, I noted that a company in my state was referenced, and Ms. Grice, thank you for coming and advocating today on behalf of the workers at Walmart. I live in Arkansas, so Arkansas is the home to Walmart's headquarters, and proud to have them headquartered there in our state. And I don't think anybody's worked harder to meet this dual effort of trying to invest in their employees since the tax plan was announced. They've made over $4.5 billion in workforce increases and raised wages, and tried to address many of the challenges that you talked about in your experience in South Carolina, which I really took quite fully from your testimony. And you know, Doug McMillan, who's the CEO there, started out as a teenager earning minimum wage, unloading trucks in the distribution center up there in Northwest Arkansas. So I really believe that he understands that balance. It's so important to raise wages, which is why 60% of their employment is now full-time, which I think is one of the highest in the retail industry. So they are a major employer, and I think in a major way committed to expanding opportunity for their managers and for their workers. I was looking at total wages and benefits of their hourly full-time employees, and when you include the benefit package that Walmart offers, it looked like it was over $19 per hour. So, Professor Lewis, I wondered, and anchor down, by the way, I'm a Vanderbilt graduate, so God bless Vanderbilt Law School. Jay Clayton said it was not in the purview of the SEC to make these decisions about capital allocation when he's testified and been in public. Do you agree it's not the commission's view to try to determine asset allocation?
Yes, I do.
And how is there, well, my time's running out, Madam Chair. I'll follow up, and I thank the witnesses. Excellent hearing. Thank you.